Is investing and trading a scam? When I started, I thought investing is a scam. Because when I started, I lost my entire life savings to investing. What I did back then was to just follow what was the next hot stock and I would buy them. Another way for me to invest was to follow the news. When the news talks about a company that is good, I would buy the stock of the company. It didn't work out for me and I kept losing to the markets. I kept losing no matter what I did, to the point I felt investing and trading is a scam. It was only later that I found out that I kept losing because I didn't really know what to do. In trading and investing, we got to really know what to do by having it down as a formula or strategy. After I have it down as a strategy, I started to stop losing and start beating the financial markets. I realized there are a few crucial principles we need to have in our strategy in order for us to beat the financial markets on a consistent basis. Today, I'd like to share with you 3 of these principles with you. Before I begin, if you find this interesting, you may want to check out my new book called Trading Secrets, where I go into more principles on beating the financial markets. Click on the link somewhere here to find out more. Let's get on with the principles. The first principle is to have an investment plan or trading plan. We need to map out all the possible scenarios, including the best case scenarios and the worst case scenarios that could happen. When we do this, we will know what to expect even before it happens. When one of the scenarios we map out happens, it will not come as a surprise to us and we will be more able to deal with the situation when it happens. Benjamin Franklin once said this: if you fail to plan, you are planning to fail. This is why a trading plan is important. It helps us to plan ahead of time what to expect in the future. The second principle is to have a system or strategy to come to a decision to trade, and it could be using fundamental or technical analysis. We could put it down in terms of rules, criteria, or even steps, and only when what we want to trade passes those rules, then we trade them. This will eliminate most of the guesswork in making our trading decisions and enable us to have a consistent approach to our trading. With a consistent approach to our trading, it will generate consistent results. And this brings us to principle number 3, which is to review our approach to our trading decisions. After we get the results from making those trading decisions, we want to see if we are getting the results we want by reviewing them. Once we review our results based on our trading decisions, we could find ways to improve our approach so that we can get better results. It's just like looking at the mirror to reflect on our appearance. This is the same for trading. When we review our trades, we could see our mistakes so that we can avoid making those mistakes again in the future. And before I go, you may want to check out my new book called Trading Secrets, where I go more into the principles of trading success. If you find this helpful, click on the link somewhere here to find out more. Thank you for watching. Remember to subscribe to my YouTube channel and like my Facebook page. I look forward to seeing you in my next video.